A very good afternoon to all of you. This is Market Fatafat on ET now. I'm Shrishti Sharma and with me is Ankita Saxena. And viewers, this is the show where in the next 1 hour, we're going to be highlighting all the buzzers right now in trade today. We will connect with our team of researchers and experts as well. But before that, let's have a quick look what the markets are up to. So for Nifty 50, not much action happening. But on the flip side, if you look at the Bank Nifty, that's near at the day's lowest point. And if you look at some of the gainers, then Pharma Major Supply is holding strong. Coal India is also up around 4%. NTPC and HCL Tech are some of the counters. But amongst this market volatility, PFC is holding strong around 3.5% after the earnings. So firstly, let's go across and listen out to the management of PFC, Parminder Chopra, CMD of the company.
We have already supported around 25% of the renewable capacity, and we hope to maintain a similar share going forward also. We have the largest outstanding book for the renewable, which is above 60,000 crore. And cumulative basis, if you ask me, then we have sanctioned around 2 lakh crore and disbursement is more than 1 lakh crore towards the renewable sector.
Another thing which caught my attention was your cost of funds, which has reduced. If you have the comparative figures, it's at 7.37%. Do you plan to maintain this at this environment per se, where lenders are finding difficult to manage cost of funds?
See, the cost of fund, I agree that it largely depends on the market dynamics. If the overall cost of funds is increasing, then since we are borrowing from the market, for us it has also to increase. But however, we are managing in two dimensions. One is prepayment of the high cost loan and replacing it with the current cost or the lower cost of funds. And the second thing is maintaining a proper mix between the foreign currency borrowing and the domestic borrowing, that too between the bonds and the term loans. This is how we are able to achieve the reduced cost of funds, as you are mentioning. Reserve Bank has always been giving guidance about the non-performing asset or where the restructuring of the project financing is done. So earlier they said that if the DCCO is extended beyond 2 years, then you have to provide for 5%. Still, what are the draft guidelines? We are examining in detail, but from the upfront reading, it seems that the intention is to provide for 5% within the initial extension of DCCO for 2 years. Okay. If you ask the impact on PFC's balance sheet, PFC has been following India's accounting systems. And whatever is the difference as per the RBI guidelines and the ECL model under the existing accounting practice, we provide for the impairment reserve in our balance sheet. So there is no direct impact what we see on the profitability of the company. Yes, there could be some adverse impact on the capital adequacy and as a result on the growth of the company, since there is some reduction in the tier 1 capital. But you might have seen our results. So on the capital adequacy front, we are comfortably placed at more than 25%. If I talk about the total capital adequacy with the tier 1 more than 23% as against the RBI minimum capital stipulation of tier 1 of 10%. So we are comfortably placed, and we don't see any immediate major impact, but however, these guidelines have to be viewed in detail, whatever final guidelines come.
My last question will be, what will be your focus area per se for this financial year? Where do you want to focus as a company? Now you want to focus on private sector as well, renewable. What are the key areas where you are looking forward?
In PFC, we have been lending across the value chain in the power sector, be it the central sector, be it the state sector or the private sector. It all depends the focus of particular segment on which there is a private sector participation is there or the state sector participation is there. You know, DISCOM has been primarily under the state sector, and renewable is majorly taken up under the private sector. So our focus area during the current financial year is renewable as well as the DISCOM. So I think we will be able to maintain the ratio, or we will be largely within those ranges only.
Can shareholders expect better dividend next time, next financial year?
During the financial year, the investors have got the bonus share also. For 4 shares in the PFC, we have issued 1 bonus share, and taking together the dividend, if you ask me about the dividend per share pre-bonus, it is 16 rupees 88 paisa, which is, I think, one of the highest. So if we get more profit, more than happy to share with the investors.
So more ROA and ROE will also improve next year.
Let us keep our fingers crossed, and we hope that we will be doing at good levels.
Thank you so much for talking to us.
Thank you.
And well, let's begin with the countdown of telling you all the stocks that are buzzing away in trade, either on the back of research or on the back of technicals. And for that, on the technical side, we are joined by Nagaraj Shetti, who is a technical and derivative research analyst, HDFC Securities. And from our research team, we are joined by Ansh and Ashesha. Hi, all of you. Welcome to Market Fatafat. And with that, let's get started with all the stocks that are in focus today. The first stock that we are talking about is Shyam Metallics. That stock is in focus today because they have reappointed Mr. Brij Bhushan Agarwal as the MD of the company, and also they have approved a big capex of 700 crores for production of flat rolled aluminium products, and approved the expansion in the stainless steel metal space by approving a plant for manufacturing of stainless steel wire rods, which shall further be used to manufacture stainless steel bright bars at a capital outlay of 110 crore rupees. And on the back of that, Shyam Metallics is in focus today. In fact, it was trading with gains of over 3% in the morning. As cooled of those gains, right now is trading with gains of 0.4%.
All right, that was Shyam Metallics, but let's move on. And Nagaraj, a very good afternoon, and let's talk about your first counter, that is IRFC. The stock was on the up move yesterday and even showing momentum today. Talk to us, how is this placed on the technical front?
Hi, good afternoon, Srishti. As far as IRFC is concerned, has been in a range-bound action over the last few months. What we have seen in the past, historically, this stock, whenever the stock has entered into a range-bound action, eventually witnessed a decisive upside breakouts. Currently, the stock price is placed at the edge of making an attempt of upside breakout around 158, 159 levels. Once it moves above this level, then I'm expecting a sharp up move is likely to occur. The next overhead resistance to be watched is around 175 levels in the near term.
All right, moving on then, and let's shift focus to a couple of chemical counters then, because UBS has come out with a report and 4 stocks particularly in focus. PI Industries, where they have come out with a initiating coverage with a buy rating for a target price of 4,800 rupees. Navin Fluorine 2 is on their buy list at 4,250 is the target, and both of these counters have been holding pretty well. But on the flip side, RT Industries, they have initiated a sell with a target price of 615 rupees, and that stock is down more than 4% in trade right now. And Gujarat Fluoro, sell rating with a target price of 3,000 rupees. What they're saying is that the structural growth on the capability enhancement and supply chain diversification is at play. The end of the destocking may add volumes, but the price remains subdued on the excess capacity. They think investors are ignoring the Indian chemical companies' strong niche positions, and they do see growth opportunities within the context of the worst global destocking cycle in the chemicals over the past 30 years, and they also see signs of modest volume recovery as well. So all in all, 2 counters on the positive side, but 2 definitely on the losing end for UBS, where they do have a sell rating.
All right, moving on to the other counter. Shesha, you picked out Edelweiss Financial Services for us. This one is trading with the gains of more than 4.5%. Tell us what is powering the stock.
Well, absolutely. On the back of good set of numbers, the stock is trading with gains of nearly 4%. In fact, at one point in time, it was up nearly 7 to 8%. One of the top gainers on the Nifty 500 index, but now it is off those levels, sitting with gains of nearly 4.5 to 5%. Very strong set of numbers that the company reported. Alternative asset management business AUM saw a growth of about 18% on a year-on-year basis in the 4th quarter. Mutual fund business AUM also saw a solid uptick of about 21% on a year-on-year basis. Gross written premium for general insurance saw a growth of 54% YOY, and customer assets too saw a growth of about 13% on a year-on-year basis, which saw a solid increase both on a QOQ and on a year-on-year basis. A very strong set of numbers that the company has reported, because of which the stock is gaining nearly 4.5% today.
All right, moving on then, and Nagaraj, let's talk about HEG because the middle counters are a buzz. But apart from that, these sector stocks like HEG and graphite also show some momentum with respect to the movement in metals. What is your take coming in on HEG, and what are the targets you're looking at?
If you look at the chart of HEG, is looking very strong. Recently, we have seen some sharp uppers in the stocks, and currently the overall chart pattern is indicating that the stock is forming a bullish flag breakout type pattern, and the breakout point comes around 2450. Once it moves above the hurdle of 2450, actual sharp up move is likely to occur in the stocks. And I'm expecting the next resistance for the stock would be around 2600.
All right, coming to you, Ansh. Saga Cement is a counter that you have picked out for us. It is an earnings candidate. Tell us, what does the report card look like?
Right, so the stock was actually trading almost 8% higher in the morning, but due to market pressure, it has come down, but it is still holding on to that 2% of gains. So the stock has actually reported revenue of 708 crore as compared to 621 crore, which is up by 14%. Also, if we see the profit, that has actually come down from 87 crore to 11.5 crore, coming down by around 87%. And this is mainly on the back of operating expense, which is up by 10%. Even the depreciation has spiked up. But if you check EBITDA, that has come up by around 75% from 38.8 crore directly to 68 crore, whereas we are seeing good improvement in margin as well, from 6% to 10%. Now, if you talk about bulk volume, then bulk sale was up by 26% and their volume was up by 37%. So overall, it looks positive. Also on charts, the stock has actually surpassed about its 20 DMA, but currently it is stuck in an 8-session consolidation pattern.
All right, but with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back.
Welcome back. You're tuned into Market Fatafat, where we are giving you all the stocks that are buzzing away in trade. Well, moving on then, Apollo Tyres is a stock that's in focus today. In fact, it was trading with cuts of almost 2% in the morning after it reported its Q4 numbers and saw a decline of almost 13% on a year-on-year basis in the net profits. The revenues, however, saw a very marginal uptick of 0.2%, coming in at 6,258 crores. The EBITDA also see an uptick of 3% on a year-on-year basis, and the margins came in at 16.4% versus 16%, which is a slight uptick of 44 basis points on a year-on-year basis. JP Morgan also came out with a note on Apollo Tyres, and they are maintaining a neutral with a target price of 535 rupees on the counter. They feel that for Q4, the FCF deleveraging is strong, but the revenue growth needs to improve. The European Union business drove the miss due to weaker than expected growth and the margins. MRF and CA reported single-digit revenue growth against a flattish growth for Apollo. That's the word coming in from JP Morgan, and they're maintaining a neutral on this counter. And we can see that on the stock movement, it is trading right now with cuts of 0.4%.
Well, yes, the company did come out with investor presentation as well, where they do expect the demand to be up in India as well as European business. But Ankita rightly pointed out, no significant movement on Apollo Tyres and no significant recovery rather. But let's move on and let's shift focus to Deepa Fertilizers then. And Nagaraj, all this fertilizer space has been doing decently well, but how exactly are you looking at Deepa Fertilizers?
Deepa Fertilizers seems to have found a bottom reversal around the 500 odd levels, 510 odd levels, and today's upside bounce after a long decline indicates that more upside is likely. The overall chart pattern is looking slightly positive for the stock, and from here onwards, the stock would move towards around 600 level, which is the next set of resistance in the near term.
All right, that's about Deepa Fertilizers, but let's have a look at Cipla, because this was the counter that was holding strong in the Nifty 50 today after a big block deal where the promoters have offloaded 2.5% stake of the company. And the market were looking forward to this particular stake sale, because earlier you will remember that there were so many reports suggesting that Cipla family promoters are really looking off to offload a stake at a higher valuation, and the reports were suggesting that because of the higher valuation, the deal could not go through. So in today's trading session, we have seen this deal and the pre-market open as well. We have seen the deal happening, and after promoters' stake off late, the stock did take it positively, because we did understand that the deal was expected to happen at a 5% discount from yesterday's closing. But maybe there were some concerns, because Cipla just reported its earnings a couple of days back. The stock was in momentum, but just yesterday, maybe because on the news flow related to the block deal, the stock was under pressure. But once this is through, we can see good up move on a stock of Cipla, 4% gains as of now.
All right, that's Cipla for you. But moving on, Ashesha, you've picked out LIC for us. This stock is trading with gains of more than 4.5%. Tell us what is really powering this stock?
Well, absolutely, some regulatory relief that has come in for LIC, because of which the stock is gaining nearly 4.5% today. So SEBI has granted 3 more years to achieve 10% public shareholding requirement. Currently, government holds about 96.5% stake in the company, and now SEBI has said that they have 3 more years, which means they can achieve 10% public shareholding requirement by March 2027. So on the back of this regulatory relief that has come through, the stock is gaining in trade. Immediately after the news that news came in, the stock saw a sharp spike, and it is building onto those gains, 4.7% higher in trade on the back of this.
All right, that's about LIC, but let's move on and let's shift focus to Sonata Software and talk to us, Nagaraj, about Sonata Software. How is this counter looking on the charts?
Yeah, it has witnessed a sharp decline since then over the last couple of months, and after showing a reversal at 500 levels, the stock is showing some consolidation. I'm expecting the 500, 495 is going to be a strong support for the stocks, and I'm expecting upside up bounces from here onwards, or from slightly lower levels. So the next set of resistance lies around 560, 565 in the near term if stock maintains its upside bounce from here onwards.
All right, moving on. Ansh, you've picked out Repco Home Finance for us. This one is an earnings candidate. Tell us what does the earnings look like?
Right, so the stock is up over 4% in trade today. Actually, their net profit has jumped by around 35.4% from almost 84 crore to 113 crore. NII has also seen some improvement of around 10.5%, which is up from 147 crore to 163 crore. Also, PPOP is up by around 7%, almost to 129 crore. Disbursement margin was at 5.2% in FY24 as compared to 4.8% in FY23. Also, the return has also seen an improvement of 7%. And if we check the profitability ratio, then we are seeing that net interest return on equity is around 15.8% versus 13.5%. Also, if you see the chart, the stock seems to have given a good breakout from its downward sloping resistance trend line, which gives a good positivity to the stock.
All right, then moving on to another counter that's buzzing in trade, Repco Khatan, that was surging in trade today, up 4% in the early trade. After it posted its Q4 numbers, investors' enthusiasm was sparked by the company's robust performance for the fourth quarter and the full fiscal. And the revenue from operations increased 29% on a year-on-year basis in Q4 to 1,078 crore rupees, while the total Indian male foreign liquor volume declined by 1.2%, and the prestige and above category volume witnessed a notable growth of 14%. Also, the IMFL revenue experienced a year-on-year growth of 4.3%, reaching a 687 crore rupees, while the non-IMFL segment revenue surged 391 crore rupees, making a remarkable increase of 126% surge on a year-on-year basis. And the company anticipates sustainable double-digit premium volume growth of the Sitapur plant and incremental country liquor volumes from Sitapur and the country liquor both in FY 2025, contributing the growth to its non-IMFL revenue to full capacity utilized price hikes that will come into effect from the that came into effect from the 1st of April 2023. So a strong set of quarter coming in for Repco Khatan, and the stock was trading with gains of 4%, has now cooled off and is trading with gains of almost 1% in trade.
All right then, that's about Repco Khatan, but Nagaraj, talk to us about Maharashtra Bank. How is this placed on the charts?
The short-term downward correction seems to be over in this Maharashtra Bank. As we can see from the chart itself that A symmetrical pattern like higher tops and bottoms is visible on the daily chart. It's gradually moving up, and recent low of around 62 odd levels seems to have formed a important bottom reversal. And I'm expecting further upside for the near term. 70 is going to be the next resistance to be watched for the stocks ahead.
All right then, that's about Maharashtra Bank. But with this, let's move on and let's shift focus to some of the upcoming earnings then, and that will be eminent, that will be in focus for tomorrow, because the stock has been trading at a record high level, and what the market is penciling in this time, a decent set, because the mix is not that supportive. We have to understand that the tractor volumes were down 20% on a YY basis, but it was the auto volumes that were up 14% on a YY basis. So that was the kind of a mix. So on the back of that, we can expect the auto margins to actually do better, while the FES, that is the farm and equipment sales segment margins, could be under pressure, and we are expecting a contraction of 30 basis point on that front. All in all, we are expecting the revenue at 24,118 crores. EBITDA expected to see a jump of 8.5% on a YY basis, and margins will be the key to watch at 12.6%. And lastly, from the profit figure, 1,891 crores is our expectation, but definitely on the back of the management commentary, we will have a look on the demand outlook, especially the kind of margins and the outlook they share on their tractor sales, which is seen to be under pressure right now.
All right, Raj, coming to you, you've picked out an earnings candidate, Oberoi Realty. That's, buzzing in trade today. Tell us, what does the result look like? It's trading with gains of more than 4% right now.
So the revenue is up by 37%. We are seeing a good improvement in profit also by 68%. So for those reasons, the stock seems very good. Also on chart, it seems to be forming a bullish pattern on candlestick pattern. So even this gives a good positive push to the stock. So for those reasons, the stock is in focus.
That's about Oberoi Realty. But Nagaraj, let's talk about Maharashtra Bank. The stock was in roll yesterday. What a gain in yesterday's trading session. But do you believe that there could be some follow-up up move in this particular counter?
Yes, obviously, I'm expecting a further upside in this stock. After a small downward correction, this stock has moved up sharply in so far this week, and currently placed around the resistance of around 2450 or 2470 level, which happens to be a strong resistance and previous swing highs. And I'm sure that the overall chart setup is indicating that we are likely to see some good upside breakout above this hurdle in the near term. And on that front, I'm expecting this stock to reach up to the next resistance of around 2600 to 2620 in the near term.
All right, that's about Maharashtra Bank. But with this, viewers, it's time to slip into a very short break yet again. Don't go anywhere. We'll be right back with more stocks.
If you like this video, then like, share and subscribe to ET Now.